It's another trading day, another opportunity to do 55 minutes of business, which is what we do right here on Business Incorporated. Here's what we have prepared for you today. The World Economic Forum is in day 3. We'll give you updates, what's happening there. South Africa inflation, consumer price index is up 3%. And Nigeria's debt status is of concern to a whole lot. We see 8 trillion naira added to it as of September. Good afternoon, everyone. I'm N8trn. We do business here, beginning from the global space. Oil prices edge high on Wednesday as the dollar weakened, with traders closely watching United States inventory, President Donald Trump's proposed tariffs, and the potential impacts of the national energy emergency that he declared on his very first day in office. Take a look at the numbers this afternoon. We see 43 cents is what was added. That's about 0.54%. That's on Brent. Now below $80, $79.72. WTI also recovered 0.59%, almost 0.6 at $76.28. Now you would notice that about this time, Brent WTI was at $77 plus, but you see it at $76.28. And Trump had said late yesterday, Tuesday, that his administration was discussing imposing a 10% tariff on goods imported, specifically this time from China, and that should begin from the very first day in February, the same day that the previously said Mexico and Canada could face levies of around 25%. He has also vowed that duties on European imports without providing further details on that. Of course, we've also been getting reactions from Europe and around the world. It's the trending conversation in the economic space at this time. Still in the global space now, gold prices climbed to a fresh 11-week peak on Wednesday, boosted by safe haven demand amid uncertainty surrounding United States President Donald Trump's trade policies and a softer dollar. Look at the numbers at this time. I do hope we can have that, but if not, I can just tell you that spot gold added about 1% to $2,748.18 per ounce, and that's after hitting its highest since November 5, 2024, earlier in the session. U.S. gold futures also gained 0.1% to $2,762.90. Trump held back from imposing trade barriers on his very first day, but doesn't mean it's now coming. That pushed the dollar lower. A weaker dollar makes gold more attractive for foreign buyers, and gold is considered a safe haven investment during economic and geopolitical uncertainty, which is what is expected and going on in some parts of the world as this time. Now, President Trump has vowed to hit the European Union with tariffs and said that his administration was discussing a 10% tariff on goods imported from China starting from February 1. And the Fed is expected to hold its benchmark rate steady in the current 4.25% to 4.50% range at its January 28-29 policy, after reducing it by a full percentage point since September 2024. High interest rates, they dampen non-yielding gold's appeal. Now look at other metals. Spot silver was down 0.4%, $30.74 per ounce. Palladium down 0.2%, $955.11. Platinum steady unchanged, that is, at $943.10 per ounce. Now, the World Economic Forum is on, and South Africa, of course, is a major participant of it. South African President Cyril Ramaphosa was there yesterday at the World Economic Forum in Davos, Switzerland, and he says that his government, which is the government of national unity, is making South Africa a more attractive destination for investment. In his address, Mr. Ramaphosa highlighted the rapid formation of the GNU, which brought together 10 political parties within 30 days, in contrast to the lengthy process in some European countries. He's also calling for greater cooperation within the G20 economic bloc to promote global economic prosperity, particularly in addressing challenges posed by climate change. South Africa is the first African nation to hold the G20 presidency for the year.
We need to leverage private capital and use innovative forms of finance, as well as taxation, to raise additional resources for sustainable development in various countries in the global south. Now, global finance institutions should help to de-risk and support more financing for emerging and developing countries. We need to support country initiatives that are aimed at addressing climate change, such as the Just Energy Transition Partnership that South Africa has entered into with a number of countries of the global north. A number of other countries followed suit and also structured their own initiatives. But these need to be financed. As we accelerate the transition to low-carbon economies in a manner that is just and inclusive, we must also at the same time recognize the damage that climate change has already done and will continue to wreak around the world.
Well, that's ongoing at Davos, Switzerland, and of course a lot of conversations going on there. As we know, the theme for 2025 is around AI, artificial intelligence, and the emerging economies was a part of the conversation earlier today. We hope to bring you that session, at least a bit from it, subsequently, as we have our correspondent, N8trn Simon, really busy over there in the cold, but keeping you abreast of what's going on. That's what we're here for. Let's take a break now. When we come back, it'll be Back to Business Incorporated. And then we're still talking about some of those policies or expected policies from President Donald Trump, the impact on the Western world and, of course, the emerging economies. That's part of our conversation waiting for you on the other side of the program. Stay with us. Welcome back to watching Business Incorporated right here on Channels Television. Following the appearance of President Ramaphosa at Davos, Switzerland, at the ongoing World Economic Forum, well, while he's right there, back home, South Africa's Consumer Price Index as their inflation increased slightly in December, rising to 3% from 2.9%. That was the number for November 2024. As part of its year-end review, Stats SA also reported that the average inflation rate for 2024 was 4.4. That's a decrease from 6% average in 2023. Inflation for food and non-alcoholic beverages edged up to 12 points of 5%, and that's up from a 12 point of 3% in November. The annual inflation rate for bread and cereal remains steady at 6.7, although prices for some items, including brown bread, saw monthly declines, down 0.6% between November and December. And in Nigeria, some things are happening around the power sector. Hopefully, it should lead to increased generation of power as well as distribution. Transgrid Energy Limited, a consortium comprising of Stanbic IBTC Infrastructure Growth Fund, North-South Power Company Limited, and Axela Limited, has acquired a 60% equity stake in a co-electricity distribution company, that's EcoDisco. And it's anticipated that the $200 million deal would be finalized in April 2025, pending regulatory clearances. The agreement represents a major milestone in Transgrid's growth inside the Nigerian power industry. For the consortium members, the acquisition represents a strategic victory with direct control over EcoDisco's operations and finances. North-South Electricity Company and the owner of Shiroro Dam will be able to strengthen its position in the electricity value chain. So, EcoDisco customers could be counting down to see more funding. Would that translate to better infrastructure and better distribution of electricity? Time will tell. And don't forget, that contract's supposed to be done, sealed and done by April this year. So perhaps we should start counting down after that. Now, back to one of the hottest topics globally this time, which is the trade policies of President Donald Trump. We heard there earlier that there's the possibility of a 25% tariff on goods from Canada. And we do know that, of course, Nigeria trades with almost all the major countries in the world. So we have the Chief Executive Officer of Africa-Canada Trade and Investment Venture, Mr. Ken Oguzie, joining us from Halifax in Canada. Mr. Oguzie, good afternoon. I think that's morning on your end, but thank you so much for your time on the program.
Very good morning to you as well, and it's nice to be here again.
Great. So this threat of 25% duties on Canadian products, what impact can it have, first of all, between the United States and Canada?
Well, I think it's a very complicated thing right now, and I think no one really has that sort of crystal ball to see where everything is heading. But I think some of the few things we've really seen right now is that when you look at the geopolitics and how things are shaping up, it's obvious that we're moving towards a very protectionist sort of mindset, whereby countries are thinking about, their people first, beyond the typical mantra you hear about, globalization and how economies need to really be sort of having that synergy together. But in this situation, there's going to be a lot of impact, of course. When you think about this tariff, there's a lot of discussions around Canada sort of retaliating, in terms of imposing certain tariffs as well. But at the end of the day, I think the most impacted would then be the consumers, people, the working class, the middle class. Because when you think about how tariffs work, especially around the import of goods from one country to the other, if you raise tariffs, then of course someone has to bear the financial burden. And usually manufacturers will put that on the consumers. So it doesn't look like a win-win for anyone in terms of having these tariffs. Of course, some might argue that, thinking about the U.S. as a bigger economy and a global power player, they might be able to sort of start looking for new trading partners, especially in the sectors where Canada might impose their own tariffs. But then that's also arguable because, both countries have had a long-standing relationship. And, we're hoping that, there might be a middle ground in terms of how, both countries can really, come together to find a sort of a mutual understanding and sort of resolve these tariff issues.
Yeah, but is it possible that, while these two giants are not on very good grounds and they search for, alternative trade partners, can Africa have an opportunity, to partner any of them? I know we're already doing that, but do you think it could work for Africa?
So that's a good question. And I think if a couple of years ago, there was a very comprehensive report done by the Business Council of Canada, a wonderful report. And I think it spoke about the fact that Canada needed to think about diversification. So it was almost like this individual saw the future. And one of the biggest, the continent they had recommended was really Africa. So they had highlighted the fact that Canada needed a comprehensive Africa strategy and needed to think of ways to diversify its trade partners, one of them being Africa. So thinking about Africa being a 1.2 billion population, 3.6% GDP growth, average across all the nations. So it was just like the most logical thing to do that. So right now we are for some of us who are international trade enthusiasts this way and who sort of play a lot in this space, there's a lot of optimism from our own side that, okay, the fact that this is happening, maybe it would probably be that push which most of the policymakers and government people in Canada can actually now start stepping up in terms of, okay, what are some of the things that we can do to ensure that we diversify or strengthen our trade. Now, one of the biggest issues has been typically there's been a lot of pushback against the fact that Canada does more around international aid and international development in Africa rather than trade. So we are hoping that things might turn around now and there might be more opportunities for, African exporters to export to Canada, vice versa, and even from an investment standpoint as well. Maybe Canadian companies can start, looking into ways to, invest, harness things like the, Africa Free Continental Trade Agreement and some of these things which have been put in place. But the biggest question too would then be how ready are we? When I mean we, I'm talking about Africa as a whole. How ready are we in terms of creating that sort of conducive environment? When you look at some of the, political instability stuff happening all across the continent, some of the fiscal policies that seem to be hurting the middle class, who would typically be the people who would sort of be involved in some of these whole trade discussions or purchasing, then that might not really all go well. However, I still think there's some positivity, and hopefully this would really get individuals, from both countries or from both regions to really come together and start thinking about what are ways we can harness our key competencies. What are some of those products, services, and goods that we typically have been purchasing or selling to other partners, and how can we then find ways to make it both of us and ensure that agreements.
All right, you talked about harnessing, which has always been a major question when you look at the African continent. The fact that we have the population, we have the raw materials, how much value have we added? Can we add, to be able to maximize the opportunities?
Mm-hmm. Yeah, absolutely. I think first of all, one of the biggest issues I could personally is the fact that some of the individuals who are in policy don't know enough about Africa. And I think I have challenged them in some of the spaces. In fact, in next week, I will be in Toronto, where I would be attending a conference. It's called Age of Africa Symposium, and really that symposium on the 8th of February is to really bring stakeholders from Canada and Africa to sort of elevate this conversation. And I think that piece has been something I have witnessed at least over the last decade working in this space, where you have so-called policymakers or individuals who it's almost like they're very ignorant about Africa and understanding what the opportunities are. We telling them, listen, you have a continent that boasts of one of the youngest population. You're a country called Canada where you have a lot of aging population. So these are opportunities for you to sort of harness into this workforce. And it doesn't necessarily have to be immigration or the whole brain drain syndrome, but it could be looking into establishing industries or manufacturing plants or businesses whereby these young folks, who a lot of them are very educated, can actually tap into, which then helps your local industry, but also helps, Africa as a continent. So it's a win-win for both, but then that piece around education and really understanding how, what are some of the things you do. So to put into perspective, for example, Nigeria has the, Foreign Investment Promotion Agreement, which since 2014 or so, it's been in the works. And up to today, I can tell you that it's not been fully implemented, even though it's been signed, but why it's not been implemented, that's another conversation. So if we, and there's been a lot of conversations around, it's you holding back. But if you cannot move such basic agreements forward, how then are we really supposed to engage? And, I wouldn't really throw any shades at each of the parties, but I just think it's important for us to really step up, especially when you think about the growing presence of Russia and China in Africa, who in quotes seem to be offering a better deal for in comparison to what Canada or maybe the US to an extent is doing. So that has even placed Africa as one of the biggest brides to be courted, in quotes, to be, if I want to put it that way. So right now it's moving away from it's a good thing to engage to Africa towards you do not have any option but to engage with Africa. So we might be the winners in some of these trade wars.
All right. Well, I hope we can and would at least take advantage of some of those opportunities. Thank you so much. Chief Executive Officer of Africa Canada Trade and Investment Venture, Mr. Ken Oguzie.
Thank you. Pleasure.
Right now, let's leave Canada and the U.S. and head to the market, find out what's going on there with Will Ibong. Hi, Will.
Hi, Ini. The markets are looking not bad at intraday, especially for most markets in Africa, except Nigeria, where it's a bit tepid there. We saw that.
But I mean, I guess after yesterday's move, yesterday we did see the approval of the 50% tariff for telcos moving the market. We saw MTN, Nigeria, and all of that. So I guess it's just time to take some profits.
Well, at the time I checked, MTN was still unchanged and nothing happening with Airtel as well. So investors are probably taking profit elsewhere, but we don't know what they are doing. But right now, not so much bullish sentiment on MTN Nigeria.
All right.
So let's see how major equities are doing in Africa. And as I mentioned, they're doing mostly good. Let's look at the sentiments at intraday. We see Nigeria's NGX was in the flat line, but much later it was down 0.02%. But looking at 103%, not still bad for that index. Now, JSE in South Africa was trading up on the other end, 0.39%. And let's look at Egypt's EGX at intraday. It was up more than 1%, 30,000 for that level of the ASI and the NSE in Kenya closed Tuesday's session in the green, 0.23%. And let's dig deeper into what's happening at the NGX. So we have Kofi Garba. Mr. Kofi Garba is the CEO, APT Securities Limited. Good afternoon, Mr. Kofi. It's good to have you on the program.
Yeah, good afternoon. Thank you for having me.
We have seen tepid, I mentioned tepid trading at intraday. What's going on?
Well, the 2025 year, no doubt that is likely going to continue with the positive return that we experienced in 2024. However, this may be achievable if the National Assembly can fast-track the budget for 2025. Remember, in 2024, we got the budget signed in 2023. Now, January is coming to an end. We have not yet finalized the budget. And being the federal government the major consumer to the economy, we need that budget to be signed immediately for the economy to take start. And that will also be reflected in the Nigerian exchange.
So what trends should investors be watching out for? Earnings season is just around the corner. What should investors be looking out for to be able to hedge against, inflation is not out of the picture yet. So what stocks should investors be watching for, trends that they should look out for to ensure that they make the most of this earnings season?
Well, I will advise investors to remain constant with the capital market. Remember last year, the market have done ahead of the inflation in 2024. The same thing was 2023, the market was ahead of inflation. 2025 will not be different. And remember that one of the major players is the telecoms. They have just get their tariff review by 50%. And what it means that the telecom sector, which they are one of the major players in the market, the MTN, the Airtel, all those that the top market capitalization of the index are definitely sure going to go upward. As of today, MTN have gained more than 20%. Airtel is on bid by 10%, and if there is a transaction of that magnitude, it can be reflected today or any other day. The same thing are likely going to repeat in the energy sector. Remember last year we have the stock like Seplat, Aradel, Ondo, they have done very well. We are expecting this to continue for 2025, and most of them have got their struck deals approved by the NNPC. So we're expecting that the 2025, but this sector to be much better. And don't forget that even though they are in the penny stock, that is the insurance sectors, they have got their capitalization improved, and we are expecting a reflection in the insurance company. Currently, some of them, they gain as much as 30% or thereabout. And we are expecting a lot of the insurance companies to do very well. And don't forget with the energy. The energy sector is not left behind. The Gregu, the Transpower, they are all in energy, and we're expecting to do the same. And the same with Transcorp, because Transcorp have UPAM apart from the Transpower, and therefore we're expecting a reflection in their performance, and therefore generally we're expecting 2025 for this stock to do very well. Food and beverage will not be left behind, and we're expecting some wonderful performance in the food and beverages.
So how do you think the market is going to end today? Want to see today's performance?
Currently it's 0.6% loss, but the market is not yet over. We're expecting to close positively, just like what it closed positively yesterday. And this is likely going to continue for the rest of the week. And we're expecting the market to close positively for the week. And if this happens, this no doubt will be repeated in the next week, because we are anticipating some of the management account or board decisions account for the corporate will be released by toward the end of this week. That is by tomorrow. Tentatively by next week, you will see more upcoming, and this will be reflected in their prices. So we're expecting more uprising for most of those companies that will release their management account, especially those that have done very well.
Thank you so much, Mr. Kofi Garba, CEO, APT Securities Limited, for your perspective. We'll watch out for that close. We'll see if there will be that magic flip from negative to positive at the close of business.
Thank you for having me.
So now let's look at other markets now. Major equities in the Gulf were positive at intraday. Abu Dhabi was up 0.36%. We see Dubai also up. Dubai was up 0.36%. Abu Dhabi was up 0.49%. Let's see Saudi and Qatari indexes, if they performed really well as well. You see the Tadawul in the green, 0.42%, and the Qatari index was up 1.1%. Really good for that market. Now let's look at Asia markets. They closed mixed on Wednesday. Now with China stocks, they declined after President Donald Trump's comments on imposing a 10% tariff on China as early as February the 1st. That is really, really quick, and that market reaction there. Now we see Japan's Nikkei 225 added 1.58%, closed at 36,646 points. Kospi in South Korea up 1.15%. But when we go down to China, we see the Hang Seng Index down 1.63%. And also we see mainland China stocks very quickly. We see the Shanghai Component also down in negative territory. We see it 0.89%. It's closed at 3,213 points, while the Nifty 50 in India was up 0.57%. Let's flip quickly to the US and see how this is working for them. Very good indeed, because the market is reacting to Trump's speech, and a lot of people are probably happy about his protectionist stance and the policies and the taxes and the trade. Well, there's a trade war right now because other countries are definitely in the mood to react to Trump. So we see the Dow Jones 1.24% up. We see S&P 500 0.88% up, and the Nasdaq futures also up 0.64%. But let's get a closer look at what happened in yesterday's trading performance, and we have Maria Bird to give us these details.
Stock market hit an upward swing on Tuesday, the first full day of the Trump administration. The Dow Jones led the way, 1.2% up. The S&P 500 was up at 0.9%, and the heavy-tech Nasdaq climbed up to 0.7%. Despite some drops that we saw in Apple and some other major companies, there was still a rebound for the U.S. stock market on Tuesday, as many investors did a sigh of relief as tariffs were not implemented on the first day of the Trump administration. Even though tariffs could be on the rebound, the U.S. stock market is hopeful that we will see some recovery in the U.S. economy.
Thank you, Maria. We see that President Donald Trump's comments in Tuesday's press conference have been scrutinized by investors, after he says he's considering that 10% tariff on China that's beginning as soon as February the 1st. Trump also announced a joint venture dubbed Stargate with OpenAI, Oracle, and SoftBank, and they're to invest about $500 billion at least in AI infrastructure in the United States share. And we saw these shares of Oracle popping more than 4% in extended trading. Netflix shares also soared more than 14% in after-hours trading after the streaming giant surpassed 300 million paid memberships. United Airlines gained more than 3% after the airline operator posted a rosy outlook and issued fourth quarter results that surpassed expectations. So a lot going on, especially with that, AI infrastructure news and these tech giants coming together to collaborate. We'll see how that plays out, and we'll keep an eye out for that. So basically, that's what one of the things that came out of Trump's speech, that AI, especially right now, the drive for tech and, artificial intelligence is on the move. And Trump is a big supporter for Bitcoin and cryptocurrency. So why not move into AI and support them as well?
Exactly. And don't forget that his very close friend, Elon Musk, is very big in that area also. But we'll see what the next 4 years has for the world. We see the world is shaking at this time at the sound of Trump. But thank you so much, Will, for that. Well, talking about President Trump, it's everywhere. And you know that they call them cousins or brothers. Just a couple of hours away from the U.S. is the UK. We haven't spoken to our correspondent, at least on our business show, since we had President Trump back in the White House. We have Simon Pusey now. Simon, good afternoon. What are conversations and expectations around this second coming of President Donald Trump?
Yeah, thank you very much for having me on. I think we're talking about Donald Trump. The sound's a little bit off here, but the UK sort of response to Donald Trump, I think, like much of the rest of the world, has been pretty precarious trepidation, certainly from the government. Anecdotally, the people on the streets, the average Joe, I think quite likes Donald Trump here. They quite like his straight talking, a bit like when Boris Johnson was in power. He's sort of a controversial figure in many ways, but he's also an entertaining one in many ways. And we've been seeing that certainly over the last 24 hours, 48 hours since his inauguration. The government here trying to repair relations really with the Donald Trump regime. The Foreign Secretary here, David Lammy, notoriously called him a tyrant in a toupee a couple of years ago, and various other tweets that haven't aged so well given he's come back into power. But like every other government at the moment, the UK government are trying to do huge U-turns and trying to mend bridges and trying to go in Trump's good books, because since Brexit, the UK has cut off quite a big trading partner or made it very difficult to trade with the EU. And part of the reason that a lot of Brexiteers were promoting Brexit was that we could make trade deals with other countries like the US. Now, no trade deal came when Trump was in power 4 years ago, and no trade deal has come since. So I think the UK are trying their best. The Prime Minister, Sir Keir Starmer, and David Lammy are trying their best to rebuild that bridge so that maybe we can benefit from coming out of the EU. David Lammy has said that Sir Keir Starmer and he will meet Donald Trump in the next few weeks. We don't know when that will be. But I think generally it's a case of trepidation, a little bit of worry, and like everyone, watching what Donald Trump and his government are going to do next.
Yeah, well, certainly the world is watching, but how's the market intraday, Simon?
Yeah, well, the FTSE 100, like other European stocks I know you've been hearing from in the last few minutes, were higher today as UK government borrowing unexpectedly rose, more than expected in December, to hit its highest level actually for that month in 4 years. It comes as the Chancellor Rachel Reeves, who's in Davos at the moment, has been defending her budget and tax rises, which were pretty controversial at the time. The FTSE All Share is up by 0.35%, the FTSE 100 up by 0.33%, and the FTSE 250 is also up by 0.37%. The pound muted against the dollar in early trading. It was up by 0.08%. It was up on the euro by 0.14% and up on the Japanese yen by 0.23%. So generally looking pretty good across the board there for the markets and for the stocks. And as always, it's really dependent on the US dollar and about what Donald Trump is doing at the moment. All eyes over there, and that is really fluctuating both the pound and the markets here.
Everything depends so much on President Donald Trump. Thank you so much, Simon, for that update. Well, talking about President Donald Trump, he's everywhere. So even when we head to Berlin or Germany, we see that the impact is there. So while the world is talking about the tariff on China, on Canada, and all of that, there's also another aspect to it. And we know that there's also a threat on Europe also coming from President Donald Trump. But apart from that, on the tariff, or the trade tariff, there's also another aspect of it that concerns Europe, and that's just about a day and a half, and companies around the globe are feeling that pinch. But there's a ban on the development of offshore wind parks. That seems to be a major one that concerns Germany. And Lars joins us now to tell us about this. Hi, Lars. Good afternoon. I mean, everybody is looking the way of White House at this time.
Yes, that's certainly true. Thanks for having me, Ini. Well, and you know what we are seeing here with President Trump banning the development, like you said, of further offshore wind parks is indeed a direct hit, because European companies are among the most active in the sector, not just here on the continent, but internationally, with quite some business in the United States, at least until now. Let's look at a German company in the sector. That would be energy giant RWE or RWE. They were having plans for offshore wind parks totaling an output of 6 gigawatt. That included projects in the New York Bay, also off the coast of California and in the Gulf of Mexico. But all those projects are now off the table per Trump's decree. As for other European companies, Denmark's Ørsted has wind parks with an output of 3 gigawatt running right now. They were as well planning more. Now, that company, Ørsted, already now, just yesterday, took an immediate multi-billion euro write-off on those parks, and that has affected the company's shares and others, of course, in the business as well. Now, well, to be fair, you got to say shares of wind energy providers, of course, have been falling ever since Trump's election, because his aversion to this form of energy had been well known. So as of now, Ørsted shares are down 26%. There's that turbine builder Vestas down 27%. And here in Germany, shares of Nordex, also wind turbine builder, also dropped 7%.
Yeah, unfortunately for investors in the wind park. But do we know why he's taking this stance at this time?
Well, that's a good question, Ini. I mean, it's really for purely ideological reasons. Trump, as we've known for a while, operates in a post-factual environment. He has his ideas about certain topics, and facts be damned, he will just decide on policy with no regards as to whether this makes a lot of sense or not. Now, looking particularly at wind energy, Trump's been saying that wind energy is too expensive, that it kills whales, and that all the machines are basically built in China anyway. Now, none of this, unfortunately, is true. Wind energy has been growing fast in the US and around the globe, mostly because it is comparatively cheap. It is a lot cheaper, actually, than natural gas, coal, and nuclear energy. There's also no evidence whatsoever that it impacts whales or other marine wildlife, as opposed to other energy sources, because drilling and building pipelines actually does affect wildlife. And then there's also the matter of imports. For years, China's market share in U.S. wind energy has been dropping, with 95% of parts and technology now coming from Denmark, Germany, Spain, India, and Mexico. So Trump being wrong with every single reason for his ban makes it clear that it won't be easy to turn this around. The new U.S. president is not interested in these facts. He simply hates wind energy. He is posing as an old school oil and gas guy, and that's the image he wants to project now and probably for as long as it helps him.
Yeah, Lars, well, I guess that's the stance of Berlin right there, how President Trump is just facing the oil and gas. But, I mean, apart from the wind parks, stocks and all of that, which you had told us earlier that it's falling, what else is happening in the market? I hope it's not spreading to other stocks.
It's not right now, at least not in a negative way. Certainly, Ini, most of the news driving markets right now are still coming out of the U.S. It's not entirely surprising, of course, after this change of guards. Now, today there's two items I think we should look at. Trump has once again talked about hitting the EU with tariffs. It's not new. He just reiterated this threat, and there are no new details. And so in the EU, lots of people worry about that. But looking at markets today, it doesn't actually show. Markets are up. They're very strong. Again, up 1.3% for the DAX at currently another record high of 21,300. Actually, just a tap, actually be over that. And it's partially due to strength in tech, and that also is driven by news in the US. Multi-billion-dollar investments are planned in AI, and that is helping a lot of stocks in that sector. Now, outside the Trump sphere, there's two winners in today's trading. Sportswear giant Adidas here in Germany, after strong numbers, the company even gaining market share worldwide. And then there's also, worth a look here, Munich Re. There may be expensive crises in the world right now, like the current wildfires, for example, in Los Angeles. But that reinsurance group still says business right now is still going very, very well.
All right, Lars, thank you so much. At least we have that good news coming from the AI experts, and I do hope it moves the market positively. Thank you so much for the updates.
Thank you, Ini.
Now let's come back home here in Nigeria. Earlier last week, we did see that the real estate sector has overtaken oil and gas sector. Yes, you heard that right, as the third largest in Nigeria. So what a whole lot of people are still homeless. Millions more, think about more than 20 million housing gap is still what we have. And the issue of pricing is a major one for the country. Perhaps if we looked the way of local building materials, we could diminish that gap. That's why we have right here in the studio Mr. Femi Rogers. He's a real estate developer, joining us to share his perspective. Mr. Rogers, good afternoon and welcome to the program.
Thank you.
I wonder how excited you are, before we get into the real estate, about President Donald Trump in the White House.
I think Trump is doing what he's supposed to be doing at the moment, considering that the world right now is going through a recession. Everybody wants to save money for their country, and that's what I think Nigeria should be doing right now. We should be looking inwards into developing our own country, focus more on developing our own goods and materials.
Do you think protectionism should be the way
Yes.
of the world, including Nigeria, especially Nigeria?
Correct. So in a case where we're not making so much money at the moment, what we should do is be saving what we have. And so we should be protecting what we have at the moment.
Okay.
And that's why I agree with the reform on the oil and gas sector, where, originally we were selling at a deregulated price, at a lower price, and then the neighboring countries are buying at that price. So what we should do is find a way of reducing losses that's within the country.
All right, well, let's get to the reason you're here, which is, can we really turn to the way of, I think it's still part of the protectionism, can we find a way of using our own locally produced building materials for our homes to at least reduce the pressure on the naira, which is why we see the value dropping, and reduce the influence of the U.S. on the country?
That's exactly what Trump is doing right now, raising, we should be raising importation taxes so that to encourage local manufacturing. We have the potential to do that, but unfortunately, we have the taste. A lot of Nigerians want to import, and that's because, it's easier to import than buy locally. So when the taxes are raised, we discourage that. And, that brings more income to the country. However, the issue of deficit is much more bigger than just building materials. There's so much that is happening in there. I think the biggest issue with the housing deficit has to do with funding, financing, especially mortgage. The country has to look very much into developing a good mortgage system, especially the secondary. we should leverage on the private sector. We should leverage more on having other kind of lenders, like private money lenders apart from the bank. Come up with policies that allow them to loan. They give easier loan than the stringent banks. So allow them to generate loans to ordinary people so that they can buy. When there is a lot of people buying, there is demand, then there'll be more, when developers will build more homes. So the main problem we have is people cannot afford to buy homes.
Yeah, but I mean, when you say funding and, others should be allowed, the private sector should be allowed, we know that the private sector is out to make profits. So the private sector being there, isn't it, we already are facing expensive homes, which is, the issue why a lot of people do not own homes. Even renting at this time is an expensive venture. So shouldn't we be looking at a way of creating buffer for individuals to be able to access funding or maybe affordable houses?
We should start from somewhere. Just like in the case of the oil and gas sector, people were expecting that Dangote would be selling at a reduced price, but he's in business. So these people, these developers are in business. They have to make money. You have to encourage them to make money. That's when they produce. And then the more production you have, the market forces will come in, and there will be a reduction in price. Without you doing that, we're not going anywhere. So let us start from a place. After a while, market forces, there is more supply into the market, then the price start coming down. That's the only way.
You are a developer, so you can tell us firsthand experience. Yes, I believe we are on the same page when we say it is expensive to own a home in Nigeria. From your practical experience, how can that be tackled for an average Nigerian to own a home? We have mortgage systems, which we know accessibility is a major one, requirement, you need connections, and all of that. So how can we make this work?
First of all, I think the government should take a national approach to this issue. It's not just, the problem is so huge, it has a multi-dimension, there's so many things we need to deal with. We need to deal with financing, we need to deal with building materials, we need to deal with regulation, we need to deal with bankable title. So we have a whole lot of approach we have to deal with simultaneously, and the government should have a plan. I think that the biggest area, the most important area is financing. Once we begin to, when we were talking about, you just spoke, we have a mortgage system, but the mortgage system we have is not robust. We have a few banks that are giving loan. What we should do is develop a secondary market, establish a bigger secondary market, a secondary market that allow other type of lenders to sell the loan they have originated, selling to ordinary people on the street. They can go there and sell it to Federal Mortgage Bank and say, look, I got a loan at maybe 20% right now, and I want to sell it to you at 19%. And then they can go back to the market. What will eventually happen is people now have, even if so it's expensive, but people have access to loan, they can buy homes. The more homes we sell, the more developers want to also produce. We also have to make loan available, construction loan available to the developers. If we have all this going on, we're going to develop not just the real estate market, manufacturing. Real estate is quite big. I think we contribute about 6% to the GDP right now, and we still have a lot of potential. So a lot of things has to happen. We also have the issues of title. We can't get, people can't get good bankable title. Once you are able to solve...
That is a very long story, Mr. Rogers, about title. And it's with state governors, CFO, and all of that, and we've seen a whole lot happening around that. But I think we would have to invite you another time to complete this conversation.
Thank you for having me.
Thank you so much, Mr. Femi Rogers, real estate developer. I think a lot of people, I would like to connect with you, being a developer, because we did homes in this country. But thank you for your time on the program. All right, now, as Mr. Rogers leaves the set, I would like to hand you to the Federal Capital Territory, where the Minister of the FCT is for a third day commissioning the rehabilitated Paikom Kore Ibua Road. It's a 9-kilometer road within Gwagwalada Area Council of the Federal Capital Territory. And it's, of course, we know Mr. Wike is the Minister of the FCT. So more infrastructure coming the way of residents of Abuja. That's for our DSTV viewers. But I mean, on our other platform for the UK and terrestrial, we're still here on Business Incorporated. And you don't want to miss Ladi, who's coming to tell us what Trump is doing to his market next. You may have to go to YouTube and then just move to the second stream so you can stay here with us on Business Incorporated. And of course, Ladi walks in with updates from the crypto space.
Right, yes, the updates at this point.
I see you have a green screen.
Yeah,
and you're happy about that.
Bitcoin is up with all of the drama we've seen.
Yeah, I think we had something in Securities and Exchange yesterday, and perhaps the market is happy with
with
that.
all the Trump family coins, hitting the market, all the memes, so much, going on. But in all of that, Bitcoin back up again when some would expect that Bitcoin or most of the market will be dropping at this time, and we see Solana. So, well, let's get a check on the sentiment in the market. How are investors feeling? They're feeling extremely greedy today. 84 points. At some point, we're tending towards neutral, but somehow investors are feeling very bullish again in the market. Let's look at some headlines now. Telegram, they've announced an exclusivity agreement making Open Network, that's N8trn, the sole blockchain infrastructure for its ecosystem. The decision marks a significant shift in Telegram's blockchain strategy, reflecting its deepening relationship with N8trn. Also, we see right in the market, the US SEC, they formed the Crypto Regulation Task Force. The Securities and Exchange Commission, that's according to the new leadership. This task force is to develop a regulatory framework for crypto assets in the first major move by President Donald Trump's new team. Also, we see Silk Road founder, that's Obert, has been granted a pardon there by Donald Trump. We know he was convicted in 2015 on multiple charges, including conspiracy to commit drug trafficking, money laundering, and computer hacking. He was sentenced to life in prison, but he's got that pardon now. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide.
Hello, Ladi. Good afternoon. Thanks for having me.
Good afternoon, Olumide. So we're seeing another headline from MicroStrategy now. The shareholders have approved an increase in the number of authorized shares, paving the way for the company to expand its Bitcoin holdings further. And I'm wondering, how much more Bitcoin can they buy?
They're already mopping so much Bitcoin that some pundits are arguing that it's a matter of time for them to have gotten about 8% of the circulating supply. Don't forget that MicroStrategy is the biggest corporate holder of Bitcoin. They have at least 440,000 Bitcoin based on last count. But if you look at market reaction, Ladi, it seems like investors are getting more cautious with the stock. Remember, the stock got as high as 500, above 500. Right now, it's consolidating around the 380 support, which is presently trades at $389, which categorically means that investors are not as optimistic as they were in November. And the reasons are simple. You saw the advent of meme coins from Donald Trump and Trump mopping liquidity in the space. There's intricacy around increased amount of scams. There were reports that the US Treasury opened an XRP wallet, which was false. So while you see Bitcoin oscillating around $105,000, you pretty much see that the altcoin market is dipping seriously. And that's because there's not so much clarity, despite the fact that it seems the Donald Trump presidency will streamline crypto regulation, just like you rightly alluded, and also the fact that we're seeing new bolder reforms in the space.
And we're also hearing from Bank of America. They say at this point, once they get the go-ahead when it comes to regulation, the banking industry is ready to go to allow crypto payments. So, with a Donald Trump, presidency, what are you expecting, for the global banking industry when it comes to cryptocurrency payment?
Yeah, To be honest with you, I'm not expecting so much because Donald Trump is the president of the world's most powerful economy, but you need to look at the intricacy around global finance. Financial institutions also have a strong say despite the input of the most powerful man on the planet. And that's because you saw the first position about Bitcoin, you saw the fact that companies like Microsoft, Apple are not considering holding Bitcoin. And the rumor about Bitcoin strategic reserve still diverse reason. And that's not because the US dollar is the reserve currency. Would Donald Trump want to undermine the US dollar against Bitcoin? Well, we want to see how that will play out. So there are a lot of question marks, despite the fact that we are seeing Trump being positive about the crypto community. But the reality is that what's on ground, it tells you that we might not see the kind of optimism we saw in November playing out in this quarter at least.
All right, definitely. We'll keep watching and see what plays out in this market. Exciting times. Everyone's feeling very bullish right now. We'll see how that continues. Thank you so much, Olumide Additional.
Thank you for having me.
So there you have it. So much. It's like a drama unfolding, in this industry. So much to look out for in 2025.
And some platforms have created programs just for Trump.
Exactly.
Trumponomics.
Yeah. Just like the last time.
It's going to be an exciting 4 years for everybody. Thank you so much, Ladi. Well, just before we go, I'd like to tell you, as promised at the beginning of the program, that Nigeria's total public debt rose to 142.3 trillion. That's as the third quarter of 2024. That represents a 5.97% increase and indicates about 8 trillion naira was added compared to the quarter before that, which ended in June. Then it was 134.3 trillion naira. And they say it's because, last year the deficit in the budget mostly came from the domestic market. So increased borrowing from the domestic market contributed largely to this. And of course, the drop in the value of the naira also. So debt servicing and Nigeria's debt status is always a topic of discussion in the country. But that's it on Business Incorporated today. Thank you so much for being a part of it again. We hope to make it better tomorrow. But before tomorrow, I'll see you for the stock market report on the news at 10. Bye-bye.